Welcome to Property Question Time. This is the programme where you can have your property related questions answered by our team of property experts. I'm Stephen Galpin, and with me today are Richard Bowser, editor of Property Investor News and professional landlord. Welcome.
Welcome to you.
Okay. With me too is Michelle Niziol, property investor and angel investor on our Property Elevator programme. Welcome.
Thanks for having me back.
Good. Nice to see you. And John Howard, property developer, author, and of course again an angel on our Property Elevator programme. John, welcome to you.
Thank you very much.
Right, Richard, I'm going to start with you now. Your first question is this. There seems to be an explosion in the number of people investing in HMOs. Will this cause an oversupply, and shall I concentrate my efforts on individual buy-to-let properties instead? Now, just before you answer that, perhaps you'd be kind enough to explain to some of our viewers who might not know what an HMO is, what in fact it is.
It's a house of multiple occupation, and it is a regulated environment and a licensed environment insofar as, depending on the number of occupants and previously the size of the building, you would or wouldn't need a license in a given local authority area. So it's 5 occupants or more, composed of 3 individual families, I think it is.
Yeah, it is.
Yeah, correct.
So technically then the difference between a house that's say got 3 apartments in it, this would be a number of bedrooms that are let to somebody and they're all sharing sort of communal areas like kitchen and bathrooms perhaps?
Yes. Without going too much into detail, yes, as you defined it. As a landlord, you will let your property to a family or to an individual or a couple, or you will let it by the room.
Right. And our viewers identifying an explosion in the number of these things.
Correct.
What's the attraction for an owner then?
Okay, well, the attraction is cash flow. It's more rental income. And in the last, well, certainly in the last 3 years since George Osborne announced Section 24, which means that private landlords with properties in their own individual names are subject to a more rigorous tax regime now. Landlords are looking at avenues where they can raise more revenue from their individual properties, okay. And HMOs certainly fall into that category.
Let's just go back on that again. I do want to make sure everybody understands our terminology, which is easy for us, but not quite so easy for them. So this Section 24, what's that all about? It's
a scheme, a tax scheme that's been brought in by the recent governments. It's now in place now. I think we're now into the 3rd year of a programme of it being phased in. But effectively, any UK business can offset their finance costs against their business income. However, with the Section 24, it means that you, as a private landlord, can no longer do that. I would strongly advise anyone wanting to understand about Section 24 and its impact on an individual landlord to speak to a professional tax advisor.
So in essence, you wouldn't be able to offset your mortgage interest costs, but you probably would be able to offset maintenance costs?
Yes, yes, absolutely. Like any other normal business, you can offset most of your costs. There is still, you are still able to offset some of your finance costs, but it is a much more stricter and less profitable now because of the impact of Section 24.
So coming to the essence of the question then, would you advise somebody starting out here to go for an HMO or to go on individual buy-to-let projects?
Well, that would depend on their experience. I certainly wouldn't advise anybody to do HMO properties or any of the variants on that, which we're hearing more and more about, without having had some good experience as an individual buy-to-let landlord. In terms of HMO properties, you can have what I would call a mini-mo, which is effectively a 3 or 4 bedroom house with maybe 3 or 4 individual tenants within it, all the way up to HMO properties with 40, 45 tenants within them. Some of these are above commercial buildings, but they are all HMOs which have been created to where each tenant has an individual room. That would be my stock answer on this would be, don't go into HMOs without experience.
Okay, cool. Anything to add?
I think typically HMOs used to provide investors with bigger yields, bigger returns. However, now HMO is, I mean, you have to cover, obviously it's regulation, legislation, getting licenses. You have to cover cleaning costs, gardening costs, council tax bills. You know, most of the HMOs come with bills included.
You've also got planning as well, planning
Yeah,
laws.
planning.
Article 4 is something you have to take into account.
Parking issues, you know, so they definitely come with. So from my experience, whenever I've looked at yields for a client, a HMO actually doesn't actually always work out cost effective.
No.
Then you have to be experienced typically with lenders. So you have to have, you know, circa 3 buy-to-lets or a minimum of 3 years experience being a buy-to-let landlord of individual properties to get into HMO investment.
I would think the tenant churn is quite a lot higher too, isn't it?
Yeah,
So
and wear and
you
tear
need-
on the property.
Yeah.
So I think when you take into consideration all of those things and the tax laws changing, and it's not, I'm not saying it's definitely not the best route to go down, but I actually really agree with Richard. If you've got no experience, don't go there initially. But you know, there are some good returns to be made on the right properties.
Yeah.
It can depend. The one other thing I would say is capital growth.
Yeah.
So if you've wrecked your property by, with all due respect, putting you know, individual doors on, you've done this, you've done that, to put it back into a habitable house to sell on the domestic market, which is probably the best market in terms of the most buyers, is expensive. So although you're getting the yield, you've got a balance between getting a better return on your money, once again, to getting capital growth.
I would add on the cost of equipping, on the cost of changing, the far more important cost to be borne in mind is conversion. What a lot of landlords are doing is taking a straightforward family house and then creating up to what is called sui generis level, which is 7 or more bedrooms, up to 6. Then fine, but more often to create those 5th or 6th bedrooms, people are going up into lofts and doing structural alterations within the loft area. You're not talking about £5,000 or £10,000 to replace some doors. In London and the southeast, and some of the, you know, you may be talking anywhere up to 250,000 to add that 5th and 6th bedroom.
It's not for the faint-hearted.
It's not, absolutely, John. It's not for the faint-hearted.
Okay, great. We'll move on. Michelle, I want to take over my father's mortgage on the family home when he retires next year. Is this easily done? I live in the property with my wife, father and mother. Currently, my father and mother are on the mortgage, though my mother has already retired.
Few things there. So I would always speak to a tax advisor to understand, you know, the tax implications there. You know, if the father passed away within the 7 years, is there any capital gains tax issues there? There is such a thing with lending, which I think is amazing. It's joint borrower, sole proprietor. So in effect, the parent could still be on the mortgage, but actually the title deeds are in the child's name. So that could be an option there that they consider. Then again, you'll sort of might then be able to get around inheritance tax, but obviously the parent is on the mortgage to help with affordability. So lots of options that they've got to can consider there, but really I think they need to be speaking to a tax advisor to make sure that they're getting the absolute best advice when it comes to.
Well, I think it's not just a question of the transferring of a mortgage, is it? It's a question of where does the equity end up, I suppose, too. That's going to have quite a considerable effect on the overall process, isn't it? John, what do you think?
Well, I think what Michelle says right, you know, you could scrap it all and of course pay the mortgage back and take a new one out. Start again, that's the other option, I suppose, but is there any point doing that? It's probably more expensive, valuations and so on.
How easy would it be to simply port a mortgage from one person to another?
So basically lenders are not going to like that in the sense that they're still going to remain in the property. So that's a very tricky one that lenders are not massively keen on. Them going on the mortgage but not being on the title deeds is a more favourable option, because then legitimately they're able to stay in the property and they have something to do with the mortgage. They're responsible for the mortgage, but actually they're not on the title deed. So again, you've got to look at long-term care and things like that, and so that would be the option that I would recommend that they would look at.
It's good enough for Michelle. It's good enough for me.
I defer to Michelle.
Yeah,
financial
well done. Good
specialist.
enough for Michelle, good enough for me and Richard.
I've turned into the financial guru all of a sudden.
You are really, yeah, well you are.
Okay, right. Well, John, we better move on to your question.
Yes.
And it's this. We have found quite a big 5-bedroom house. Recently changed it around so our elderly father could move in with us. Although we've kept the house as a family home, we've arranged the rooms so he's living downstairs and we live upstairs. However, sharing the kitchen downstairs is just not working for us all. We have decided to install a kitchenette upstairs in our living space, but we're unsure as to what we would need to do in regards to any regulations we might need or to ensure that all this is being done properly.
Okay, well, what they don't say is whether the building is listed or not. And if it's listed, it might have more implications. What I would do, I would just very simply phone the building inspector at the council, explain what you want to do, and just check with them that you don't need any more.
I suppose the upstairs point would come down to exit in case of a fire.
Absolutely, fire door. I would imagine, but then it's your own home, of course, private home. So check with the building inspector.
And yeah, if I can chip in with my little finance hat here, lenders really don't like that. So your typical high street lender is really not going to be keen on kitchenette upstairs. They're concerned about subletting. They're concerned about you putting another access in, or and also they're concerned about resale and how that affects the saleability, because not everybody would want that. So
I think they're being a bit difficult there.
And they can be,
I
John.
understand that.
So
Well, they're protecting their...
They're protecting their...
so you
their
would
investment.
need to actually, weirdly enough, get consent from your lender. If you were doing things absolutely legitimately, get consent from your lender as well as checking out the building control.
Check out the building regs.
Do you know, I had this with my parents, and I think the key here is when you do have elderly parents, there comes a point where you just have to say, this property doesn't work.
Yes, absolutely.
Yeah. Time to move.
Yes.
And I actually, I went and bought my mum and dad a sort of small flat, which they hated for the first week and then loved ever after.
Well, they would do, wouldn't they?
Because the responsibilities.
Renting someone away from their home for 50 or 60 years.
Absolutely.
It's very difficult.
But it's so much more effective in the end. Anyway, that's all we've got time for in this half of the programme. Join us again after the break.
Investing in property and building a portfolio can be easy with the right support and service. From property sourcing to selection and financing, through to refurbishment, vetting and letting. Michelle Niziol's bespoke property investment service does all the hard work so you don't have to. Let Michelle take care of all the headaches while you relax and earn stress-free profit. Contact her now to find out how easy it really can be.
My name is John Howard, and I've been investing and developing properties for over 40 years. In that time, I've been very successful, but of course I've always made the odd mistake as well. In my book, I explain how to be successful and what to do should something go wrong. I've survived 3 property recessions. I can help you do the same. My book is available online. Please go to johnhowardpropertyexpert.co.uk.
Looking for your freedom? Where you can live, retire, holiday and invest? We know where you can find it. 22nd and 23rd of June 2019 at the Motorcycle Museum, Birmingham.
The tax system has evolved significantly over recent years for property investors and developers. You may think that you and your accountant have a grip on these changes. However, unless you're receiving specialist tax advice from a specialist tax advisory firm, then it's unlikely to be the case. At ETC Tax, our team of highly experienced chartered tax advisors work with private individuals and companies to deliver effective tax planning whilst meeting HMRC compliance requirements. Let us help you to meet your personal or commercial objectives in the most tax-efficient manner. ETC Tax, making the complex simple.
welcome back to Property Question Time. I'm Stephen Galpin, and with me are Richard Mouser, welcome back, Michelle Niziol, welcome back, and John Howard, welcome to you too. Richard, we're going to start off the second half with your question, which is, when one reads investment advice or finds it on the internet, are these advisors responsible in any way if they give poor advice and following them results in problems?
Well, it depends on who's giving the advice and whether they've got any professional credentials to give that advice, and therefore your potential ability to seek redress should that advice be misplaced. Anything on the internet, I would, on forums, social media, of which there is just so much these days, I would be very, very careful about taking that advice. It's very easy now to put together websites, very cheaply, and give a very professional presentation appearance, and so people have to be very careful.
Right. Okay. And who actually does bear the responsibility on the internet? Is it the website provider that's offering the comment? Is it the person making the comment within that website? Where does the responsibility lie?
Good question.
I'm not sure anyone has the responsibility. I think that's the problem.
Well, if any,
there is none.
Yeah, it's an unregulated industry, isn't it? The property's unregulated industry, and also finance, when it comes to investment in property, is unregulated. So although you can make a complaint to the Financial Ombudsman Service, they tend to throw it out because it's an unregulated product. So, I think you're absolutely right, Richard. People have got to be so careful. Everybody is a property expert nowadays.
Well,
and
I have to say,
you really have to look at
Michelle,
their credentials and, their...
What's the track record?
Absolutely.
What have they
where's
done? Where's the evidence to
that they're an expert?
It drives me insane. Yeah. They've been doing it for a year and suddenly...
We were talking about this earlier.
They're experts.
Again, we're seeing a lot of these crowdfunding exercises put out on the internet, and you do just wonder whether some of the claims are a little bit fanciful.
I just think if it sounds too good to be true, it normally is. And how on earth is someone an expert after a year or two? It's just not possible. It's not true, and it's not possible.
My advice would be take advice from someone who's qualified, and it's easy enough to check out people's qualifications.
Qualifications with either a long-term experience or a chartered surveyor or something like that.
Yeah.
And then I think I would add to that, simply go back to your own professional advisors once you've done your due diligence and put it to them, I think.
I think that's right, Good advice.
Okay, great stuff. Michelle, I want to purchase a property as a first-time buyer. I've got a reasonable credit score, but have been self-employed for only 2 years and have only then one set of self-employed accounts. Is this going to stop me moving onto the housing ladder? If not, how would I calculate the amount I can borrow? Okay, so in order to get a mortgage, there are some lenders available that will only accept 1 year's accounts. I think that just only being self-employed for a couple of years, they just need to be careful of affordability. Just to make sure that their income, that they know, just because you can get a mortgage doesn't necessarily mean that you should. Or you can pay it. So I think they need to just be certain of their self-employment. What field are they in? What does that look like in uncertain times? But as long as they're comfortable with that, then basically lenders typically, maximum they'll lend is 5 times their earnings. So on a self-employed person, that is your net income on your tax return. So five times income being maximum, 4 to 4.5 times income being the norm.
Can I just say, 5 times income? Stephen, 5 times income? Are they serious? When it gets to 5 to 6 times income, guess what happens every time? Recession. We're at that peak almost now. The only thing stopping us is interest rates are incredibly low.
Well, that's exactly it. It's
incredibly
just
low.
Whole low base
Don't you think so, Richard?
Absolutely,
You've seen it. You're as old as me. You're as old as me. You've seen it before. Michelle's a bit younger.
The whole boom, 15% rates, and where are we now? Whatever it is, 0.75 for how long? How many people watching this programme, under the age of 30 or whatever, will have any recollection of Richard, even understanding. Very
but the trouble is, if if the income multiples are not that level, because house prices are so high,
Yeah, well,
literally no one.
But
no
guess
one's
what
able
happens?
To buy.
Guess
Well,
what happens,
absolutely.
Michelle? The prices come down because five times is getting in the point of recession. 5 to 6 times.
I agree.
Be careful.
Yeah.
Be careful, absolutely. But how long are we going to have this era of very, very low interest rates? For the foreseeable future, the latest swap market, if you look at, we're looking at maybe barely up to 2% by 2023.
But Richard, if Labour were to get in, and God
that's a
forbid,
story.
if Labour were to get in, they would borrow a massive amount of money, which would put up our interest rates.
Yes.
You know, anyone in property needs to understand that and be responsible, not only to their investment, but also their tenants. Because if you get into financial difficulty, if you've got a moral code, your tenants will be out.
Yeah.
Well,
So
this is
you
the
need to be careful
this is
what
the
you wish for.
this is the difficulty I see with this alteration to Section 21
Absolutely.
notices. You know, if your financial circumstances change and you can't maintain that property as a rental property, what on earth happens?
Because ultimately, if you can't get the tenant out, there is a discount to what it's worth. And that discount is probably 20 to 30%.
Yeah.
With sitting tenants in the old days,
Yes.
we used to pay 50% of the open market value. When they become assured tenants, which was the thing before short holds, we paid about 70%. Market rent, but you can't get them empty. That's what people aren't going to understand.
Well,
they're going to bury their head in the sand and still think it's worth 100%.
There was a certain gentleman in the
No,
60s that bought most of Notting Hill that way, I think.
Exactly.
Wasn't it? You know?
There was.
So there we are. All right, John, we're going to move on to your
Sorry,
question.
I didn't realise that wasn't my question. Sorry, go on.
That's all right.
Bit passionate, sorry about that.
Right. For investors with very limited funds to start,
Yes.
but plenty of time, how fast is it possible to build up a property portfolio by simply reinvesting the rental income? Can you provide any unofficial guideline as to how this could be done?
Well, if you talk to some people, you can become a millionaire in a year, apparently. I didn't.
So we heard the other
So we
day.
heard the other day.
Depends on what property.
So we heard the other
You
day.
can do better there if you buy in the wrong place at the right time. You can become 1.5 times a millionaire with
that
£1.5 million of debt
Debt, absolutely. So
relative to equity.
all I can say, it took me an awful longer than that to be successful. So, goodness me, where do we start? I mean, it depends how much they've got, doesn't it? In a way, if they want to gain capital, grow capital, then the best way is to buy and sell. And no one seems to be that interested these days in buying and selling.
Well, it's a lot more difficult since a certain chancellor decided to introduce the 3% SDLT tax on second home ownership. Certainly in London, it's making trading a property in London a lot more difficult.
It is, Richard, but also that should mean that there's more opportunities because less people are doing it.
Absolutely. No, I don't disagree with that.
And actually, if you can buy and sell and grow your capital, it's going to be a lot quicker than buying a buy-to-let property, sitting on it for 3 years, hoping the market's going to go up.
10 years.
Or 10 years.
Yeah.
Because as I say, when I speak sometimes at different seminars, my dog is called Ivy. Ivy is a lovely labradoodle. In a hot market with a rising market, she can make as much money as anyone sitting in the room. If the poor was her signature, she'd make the same as everyone else. The difference is she won't know when to stop.
Well, I suppose this again to some degree comes down to the stamp duty argument which you alluded to. I personally would have liked to have seen stamp duty change to the seller rather than the buyer.
Yeah, absolutely.
Because I think that way, first of all, it can be funded within a normal mortgage context.
I agree.
And secondly, when people sell, 9 times out of 10 they sell because they're making a profit.
Yes.
And if it just then becomes a small tax on that profit, I don't think that's a bad thing. I think the days of us having huge profits on our homes that we sell, tax-free, are over and unsustainable.
The whole generation
it's
rent
gone.
political phenomenon, that is absolutely
Stephen,
blown
what
that
I-
away.
yeah,
That's
what
not
I
gonna
would
happen.
But getting the government to do anything about it's a different matter.
Well, that
I mean,
will
they've
be
had
interest-
advice on this.
Yeah.
So we
several
can talk
times.
to them.
Yeah.
We can talk to them. You can talk to your MP. You can talk to a minister. It's not that hard. It's not as hard as people think it is. If you want help, go and see your MP. Start the process there and work upwards so you see the right people.
How many landlords have spoken to the government and their MP about trying to revoke Section 24 and been met with deaf ears?
Well,
or
we're
a
going to have
standard
the good
response?
news is we're going to have a new Chancellor. We're going to have a new Chancellor. That always gives an opportunity for fresh ideas.
Well, I think the political imperative out of where the rental market is heading is the realisation, as with what happened in Ireland, where they had a similar scheme over there, I think in 2009, and after 5 years they scrapped it because they realised just how rents were being driven upwards by an increasing shortage of rental properties, and this is what's happening. The implications of Section 20.
Massive housing shortage in the south of England.
If you restrict supply of rental property when demand is increasing in a relatively healthy economy, then as night follows day, prices will rise.
Richard, you talk a lot of sense.
I try to.
You do.
Okay, well there we are. That's all we have time for today. Thank you to my guests, Richard Bowser, Michelle Niziol and John Howard.
Pleasure.
Thank you for your input and superb answers to the questions.
Enthusiasm.
Well
Thank
done.
you, sir.
Okay, as I said, that's all we have time for, so join us next time on Property Question Time. My name's Stephen Galpin. See you then.
If you have any questions you'd like to send to the experts at Property Question Time, you can submit them via our website, on social media, or email us on info@propertytelevision.co.uk.
Investing in property and building a portfolio can be easy with the right support and service. From property sourcing to selection and financing, through to refurbishment, vetting and letting. Michelle Niziol's bespoke property investment service does all the hard work so you don't have to. Let Michelle take care of all the headaches while you relax and earn stress-free profit. Contact her now to find out how easy it really can be.
My name is John Howard, and I've been investing and developing properties for over 40 years. In that time, I've been very successful, but of course I've always made the odd mistake as well. In my book, I explain how to be successful and what to do should something go wrong. I've survived 3 property recessions. I can help you do the same. My book is available online. Please go to johnhowardpropertyexpert.co.uk.
Looking for your freedom? Where you can live, retire, holiday and invest? We know where you can find it. 22nd and 23rd of June 2019 at the Motorcycle Museum, Birmingham.
The tax system has evolved significantly over recent years for property investors and developers. You may think that you and your accountant have a grip on these changes. However, unless you're receiving specialist tax advice from a specialist tax advisory firm, then it's unlikely to be the case. At ETC Tax, our team of highly experienced chartered tax advisors work with private individuals and companies to deliver effective tax planning whilst meeting HMRC compliance requirements. Let us help you to meet your personal or commercial objectives in the most tax-efficient manner. ETC Tax, making the complex simple.
If you've got a question about property, why not ask an expert? Property Question Time gives you the opportunity to ask anything you want, whether it's about planning, finance, conveyancing, moving abroad, literally anything that's property related. The Property TV panel of experts are available to answer your questions no matter how complex they may seem. Simply email your question to info@propertytelevision.tv and join us on Sky Channel 189 to hear your questions answered.